Inflation. You buy a bag of chips, open it, it's half empty. You check the price, 30% higher than last year. That's inflation. Inflation is money slowly losing value over time. Not dramatically, not loudly, just erosion. Your $5 bill still says $5. It just buys less food, less gas, less life. Why does inflation happen? Sometimes too much money chasing too few goods. Supply chains break, costs rise, expectations spiral. If people think prices will rise, they spend faster, which raises prices, which confirms the fear, a self-fulfilling prophecy. A little inflation is normal, around 2% is healthy, but high inflation destroys savings and makes wages feel useless. To fight it, governments raise interest rates, loans get expensive, spending slows, the economy cools down, which brings us to recessions. A recession is when the economy shrinks for at least 2 quarters. Everything feels fine until it doesn't. Layoffs start, markets fall, people stop spending. Why do recessions happen? High interest rates, global crises, pandemics, wars, economic cycles doing their thing. Think of the economy like a party. Boom phase, music loud, drinks flowing. Peak, everyone's reckless. Bust, lights flicker, someone checks their bank account. The DJ switches to sad lo-fi beats. Recessions hurt, but they're resets. Eventually, rates drop, spending returns, growth resumes, not without scars. Credit scores. Your credit score is a 3-digit judgment of your soul. It decides your interest rate, whether you get approved or punished for existing. It's not about wealth, it's about trust. Scores range from 300 to 850. Below 580, red flag. Above 750, adult credibility unlocked. Calculated using payment history, credit utilization, credit age, credit mix, new applications. Miss payments, score drops. Care for it, it helps you buy a house. Ignore it, and it ruins your life quietly. You can have no debt and still have a terrible score. The game is rigged, but if you learn the rules, you can rig it back. Money and currency. Here's the weird truth. Money isn't real. It's a shared belief. A dollar bill has no intrinsic value. Neither does crypto. Neither does gold. They only work because people agree they do. The government prints money, central banks regulate it, people trade it for goods and services. Too much money? Inflation. Too little? Economic suffocation. Money is a social contract, and you're living inside it.
Investing. Inflation eats idle money. Investing fights back. Investing is when money stops sitting and starts working. You trade money for more money. Options include stocks, bonds, funds, real estate. Investing isn't luck. It's time, diversification, and patience. Markets go up. Markets go down. The real risk isn't losing money. It's never investing at all. Value and time. Value is subjective. Gold isn't better than a rock. We just agree it is. People who create value get paid. Even perceived value works. Time is the real asset. You can always earn more money. You can't earn more time. The earlier you understand this, the richer your future self becomes. Wealth isn't built fast. It's built quietly. And those who win usually just stayed consistent longer than everyone else. Money isn't evil. It's not magical. It's a tool. And once you understand it, it stops controlling you. It starts working for you.